Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about GUANGDONG INV interim report. GUANGDONG Investment Limited offers a diverse range of businesses and services across various sectors. These include water resources, water distribution, sewage treatment, water pipeline installation, consultancy services, infrastructure construction and machinery sales, property investment and development. Property investment, rentals and management services for commercial properties in Hong Kong and mainland China. Department stores operation, department store operation, sale of goods, concessionaire, and operating area management in mainland China. Electric power generation, coal-fired power plant operations supplying electricity and steam in Guangdong Province, mainland China. Hotel operation and management, hotel operation and management services for third parties in Hong Kong and mainland China. Road and bridge project investment, toll road operation, and road management in mainland China. Others, treasury services, corporate services, marketing management, environmental engineering, and other related services. GUANGDONG Investment's stock price has surged by over 51% in the past year due to a combination of factors. Strong profit growth and positive financial reports have been key drivers, with an 11.2% rise in profit attributable to owners and increased earnings per share. Analyst upgrades from CD and BOF-A securities, citing attractive dividend yields and positive forecasts, have also contributed to the stock's increase. Additionally, a stable water supply business and improved liabilities have boosted investor confidence. Furthermore, references to an infrastructure push in 2025 may be attracting investors. Some analysts even suggest that the stock is undervalued, with its P/E ratio below the industry average, indicating a reevaluation of the company's intrinsic value and future prospects. The primary drivers of revenue growth or decline for a company can be identified through an analysis of its financial summary. In terms of revenue growth, the water resources segment saw significant increases in income from water distribution and construction services, while the property investment segment experienced growth in management fee income. The hotel operation and management segment also reported increased hotel income. On the other hand, revenue decline was observed in several segments, including department store operations, electric power generation, and road and bridge operations. These declines were largely due to decreases in commission income from concessionaire sales, sale of goods, and toll revenue. Additionally, changes in receivables under service concession arrangements and contract assets also had an impact on the company's revenue growth or decline. Overall, these factors highlight the importance of monitoring various segments and financial metrics to understand the drivers of a company's revenue performance. Net income experienced mixed results between 2024 and 2025. While it increased by $306,232 in some instances, it also decreased by $135,991 and $1,785 million in other cases. Profit margins showed more consistent growth, with the gross profit margin remaining relatively stable at 55.6%, operating profit margin increasing to 43.1%, and net profit margin remaining steady at 99.7%. The improvement in profit margins can be attributed to various factors, including exchange rate fluctuations, interest rate changes, macroeconomic uncertainty, and foreign currency risks. The company is generating positive operating cash flow, as evident from multiple financial summaries. On page 12, net cash flows from operating activities amount to a significant HK $3,339,443. Similarly, on pages 39 and 58, cash flows generated from operating activities are reported as positive, with net cash inflows totaling HK $105,496 and HK $3,339 million respectively. These figures collectively indicate that the company is producing substantial positive operating cash flow. The company's debt level has undergone significant changes over the past period. On page 32, the debt decreased by $1,684,674, 7.15%, while on page 36, total financial liabilities dropped from HK $34,552,271 to HK $32,029,132. Furthermore, on page 57, financial borrowings from continuing operations decreased by HK $685 million to $21,177 million. However, the interest expenses have shown mixed results. On page 24, finance costs incurred decreased by $148,446. Nevertheless, on page 43, interest expenses for 2025 are significantly lower than in 2024, with a decrease of Keith million, $98,000 and $7 $182,000 respectively. The company's financial performance varied across different segments and regions. In terms of segments, the road and bridge segment stood out as a bright spot, performing well. On the other hand, department store operation, electric power generation, hotel operation and management, and others were all classified as poor performers. Regionally, mainland China faced foreign currency risks due to exchange rate fluctuations, while globally there was a risk of macroeconomic instability due to trade barriers, geopolitical conflicts, and weakening business and consumer confidence. In contrast, the domestic market in Hong Kong remained stable and progressive. Management's outlook on the company's strategy: the company's management is closely monitoring its operating segments to ensure effective resource allocation and performance assessment. In anticipation of potential foreign currency risks due to exchange rate fluctuations, they are taking a multi-strategic approach to mitigate this risk. Furthermore, they aim to explore new revenue sources, reduce costs, and enhance project profitability through various measures. This indicates that the company is proactive in managing its operations and adapting to changing market conditions. There were no notable acquisitions or divestitures in this period. The company's financial strategy focused on organic growth and internal development rather than external transactions. The company has demonstrated its commitment to returning value to shareholders through two key initiatives. Firstly, it has paid dividends to investors on multiple occasions, as documented in various sections of the financial summary. Secondly, the company has also engaged in share buybacks, allowing it to repurchase shares from existing shareholders and potentially boost their returns. Concerns about inventory buildup and supply chain disruption: the financial summary highlights a pressing concern for the company's future prospects. The data reveals a significant increase in inventory levels from 309,360 units in 2024 to 566,255 units in 2025. This substantial buildup of inventory raises red flags about potential supply chain disruptions and inefficient resource allocation. If left unaddressed, these issues could have far-reaching consequences for the company's financial health and overall performance. That concludes the financial summary for Guangdong INV. Feel free to comment below, and I will be happy to answer them when possible.